Guggenheim Scott Minerd discusses greatest investing opportunity, warns stocks vulnerable to further declines. The chief investment officer of asset management firm Guggenheim, Scott Minerd, says that the current market has delivered the greatest investing opportunity of a generation. He also warned about some investments that he expects to decline further. Guggenheim Scott Minerd on the greatest investing opportunity of a generation. The chief investment officer CEO of Guggenheim Partners, Scott Minerd, shared what he believes to be the best investment under the current market and economic conditions in a series of tweets Monday. Minerd is also the chairman of Guggenheim Investments, the global asset management and investment advisory division of Guggenheim Partners. Guggenheim Investments has about $325 billion in assets under management across fixed income, equity, and alternative strategies. Current market has delivered perhaps the greatest investing opportunity of a generation, bonds of good companies trading in the 80s. Downside is they pay off at par, upside is they hand over the keys, he added. Noting that, investors should look to bonds of otherwise good companies issued at much lower rates that have traded down, Minerd cautioned. Another renowned investor who recently recommended bonds is billionaire Jeffrey Gundlach. He's bearish on the equity market, expecting that the S&P 500 to fall 20% by mid-October. Buy long-term treasuries, he advised, suggesting that investors dive into long-term U.S. debt securities. Gundlach also warned about the risk of deflation. Others who have warned about deflation in the U.S. economy include Tesla CEO Elon Musk and ARK Invest CEO Cathie Wood. U.S. President Joe Biden, however, is optimistic about the economy, noting that inflation has not spiked for several months. Recently, J.P. Morgan advised investors to get into value stocks while Goldman Sachs recommended commodities. Rich Dad Poor Dad author Robert Kiyosaki has warned that Fed rate hikes will destroy the U.S. economy, advising people to invest in real money, naming gold, silver, and Bitcoin. He has urged investors to get into crypto now, ahead of the biggest crash in world history.
Public comments on crypto-related illicit finance and national security risks. The U.S. Department of the Treasury is seeking public input on digital asset-related illicit finance and national security risks. The department warned, the growing use of digital assets in financial activity heightens risks of crimes such as money laundering, terrorist and proliferation financing, fraud and theft schemes, and corruption. U.S. Treasury wants public comments on crypto-related illicit finance. The U.S. Department of the Treasury published a notice Tuesday inviting interested members of the public to provide input pursuant to the Executive Order of March 9, 2022, ensuring responsible development of digital assets. The notice adds, the department invites comments on the digital asset-related illicit finance and national security risks as well as the publicly released action plan to mitigate the risks. Treasury welcomes input on any matter that commenters believe is relevant to Treasury's ongoing efforts to assess the illicit finance risks associated with digital assets as well as the ongoing efforts to mitigate the risks, the notice adds. Comments must be received on or before November 3. The growing use of digital assets in financial activity heightens risks of crimes such as money laundering, terrorist and proliferation financing, fraud and theft schemes, and corruption, the Treasury detailed. These illicit activities highlight the need for ongoing scrutiny of the use of digital assets, the extent to which technological innovation may impact such activities, and exploration of opportunities to mitigate these risks through regulation, supervision, public-private engagement, oversight, and law enforcement. The Treasury requested answers to a list of questions concerning illicit finance risks relating to digital assets, non-fungible tokens, NFTs, decentralized finance, DeFi, and peer-to-peer technologies. The questions focus on illicit finance risks, anti-money laundering and countering the financing of terrorism, AML-CFT, regulation and supervision, global implementation of AML-CFT standards, private sector engagement and AML-CFT solutions, and central bank digital currencies, CBDCs. One of the questions asks how the Treasury can most effectively support consistent implementation of global AML-CFT standards across jurisdictions for digital assets. In addition, the Treasury asked whether there are specific countries or jurisdictions where the U.S. government should focus its efforts to strengthen foreign AML/CFT regimes related to virtual asset service providers. The full list of questions